Hey everybody, welcome to the Money Coach Show. This is your team, Robert. We have Tara, the other mortgage professional, as well as our financial guru, Damien. Today we're going to be going over some mortgage documents needed. And you know what? Our team is geared and ready to make sure that you guys know all that's needed. So those mortgage documents, they're simple ones, but still it can be daunting because they're going to be asked a lot of you. You know, they're going to basically look at your complete financials, complete credit. So let's go over them. So our actually, first, most importantly, September 18th was a few days ago, was actually yesterday. And with that, let's go ahead and get Tara for the market update.
Sure, yeah. So finally, the long-awaited date of September 18th has passed, and on Wednesday, the Fed did exactly what we expected them to do, and they finally cut the rates. They were talking about either cutting them by 25 basis points or 50, 50 being 0.5%, and they ended up taking the higher end and did a full 50 basis points or 0.5% lower on the interest rate. This is the first big cut that they've had in 4 years, so this is huge for the mortgage industry. But something I want to explain to people that don't know this is the Fed rate is not the same thing as the mortgage interest rate. The Fed rate is the rate that they charge to lenders and banks to lend money to them. That is not going to be the same rate that the lenders charge consumers. So this does mean that, yes, eventually the rate is going to come down for the mortgages, but it's not an immediate, in effect immediately. And also, the lenders already assumed that they were going to lower the rates, so they prepared for it by already having the rates lowered. So what we saw as soon as the Fed made this announcement, mortgage rates actually went up just a little bit. But as the market adjusts, we're going to see those rates start to come back down again slowly. And Powell affirmed that the progress that's been made on inflation and the weakening labor market, based on data over the past few months, is going to lead us into continuing to lower those Fed rates. So maybe even another 50 basis points by the end of the year, and maybe another 50 basis points next year. So we should see mortgage rates slowly start to come down, but rates are already low. Like I said, lenders already anticipated this change. So they're in the fives. It's a great time to refinance or talk to your lender about purchasing a home if you haven't already or you're in the market. So they've had one meeting September 18th, and they have 2 meetings left this year, one being the day after the presidential election. So everybody stay tuned. We'll bring you another update then. But yeah, that's it for the market update.
Wow, Tara, that was an amazing update. And you know, it's so much information there. You know, a few questions that I had were, and possibly I don't mean to throw you a fastball here, but at the same time, that explanation is pretty amazing. So now we at Loan and Key, we're definitely loan officers that can help you out with that. So we want to make sure that we can add some value and understanding to what the market does. But back to my question, Tara. So as I have here, you know, the markets have definitely adjusted by 50 basis points, and you've clearly explained that that's basically a 0.5%. Now, if correct me if I'm wrong, that's a huge dollar amount that you can be saving right now, correct?
Yes, definitely.
So, and you know what? It's like we can't get into figures right now because we don't know the financials of the loan that you want to get into, but we can definitely get that if you give us a call. But what I basically want to make sure is, you know, making sure that we're not buying that rate. You know, we're buying that house. You know, we're marrying the house. We're not marrying that rate. So as you mentioned, would it's safe to say, hey, we can buy a house now, and within a year, if rates get down even better or even lower, I should say, excuse me, we can definitely refinance and hey, even get capitalize on that adjustment later on. Correct?
Yeah, absolutely. So, a lot of people didn't want to buy in the past couple of years because rates were higher than we were used to seeing, especially after COVID. And I mean, yeah, 0.5 percentage point is going to make a big difference on your monthly payment. However, it's important to work with a broker and somebody that's going to sit down and go over your financials with you, because waiting for the rate to drop isn't always going to be the best case scenario for you in terms of building equity and building wealth in the long term. So you want to have somebody that's going to sit down and actually explain this to you, show you graphs and charts, show you how to make your money work for you. But this is a big deal having the rates come down. We're going to see better monthly payments already right now. And like Robert said, if you've been thinking about buying, now is an amazing time to do it. And again, yes, if in another year they go down even further, awesome, we can refinance and get you even a lower payment then. But right now, rates are the lowest we've seen in the past year. So if you've been considering it, now is the best time.
Awesome, awesome. So, thank you for that. And hey, let's move on to, the bulk of today's show. It's going to be those documents needed, just in case of, hey, you can afford that home now. We can make sure we can get you in it within 30 days. There's no time to wait. Let's get it done now. So make sure you reach out to us, Loan and Key. All of our information will be in the notes below. But let's go into that mortgage knowledge, mortgage 101. We're going to go through the documents needed for mortgage. So we have basically 6 documents that we're going to need from you to make sure we can get that loan going. Make sure that you can get into that new home or have that refinance done and completed as soon as possible. So in those 6 articles of items that needed are your full name, your income, your social security number, the property address, property value, and your loan amount. So we need those 6 documents. So that will trigger off an LE. An LE is called a loan estimate. And that has to be delivered to you within 3 business days. So you want to make sure that those are in, and then we will be able to get you that LE. And basically it gives you all the articles of information that you're going to be paying, every dollar and cent that you're going to be paying for the initiation of that mortgage, and even your PITI payment. That's PITI payment. That's going to be a later episode that will break that down and explain everything for you in detail. But today, loan documents. So again, those 6 documents needed, that's going to trigger that LE that we're going to need, or that you're going to need, so you can be able to understand what you're getting into, and we'll make sure we walk you through that as well. So now the documents that pertaining all of those as well, we're going to need income verification. So that's going to be pay stubs, and that's going to be the most your recent 2 months of pay stubs. And then we're also going to need your W-2 forms for the past 2 years, and that's the most recent 2 years. And why they need that is they want to make sure that, hey, you have a steady income. And then also, if there's any gaps, you're going to need a letter of explanation.
Robert, real quick. So sorry to interrupt. I had a question. What happens if, let's say, somebody has been in a particular field of work for a few years, but they had a job change, maybe in the last 6 months or a year? Does that impact the process of trying to qualify for a new home loan?
Well, I will say this: do not change jobs while in the process of getting a new mortgage. That's the worst thing that can delay it. Now, if there are any gaps prior to the loan agreement, there needs to be a letter of explanation on why you are, there's a gap in between, one workplace to another. Maybe the position wasn't open yet, or you're going through any type of process, the hiring process. We know how sometimes those can take a while, up to 2 weeks, and sometimes you're going to need that letter of explanation for that. So, good question.
That makes sense.
Thank
you, Robert.
If you do have to change jobs, like every lender is going to prefer that you don't, because it's going to delay the closing process. It's going to complicate things a little bit. They're going to need more documentation from you. But if you absolutely must change jobs, I mean, we get it. It's life. It might happen. Just expect that the lender is going to need proof that you're going to make a certain income at a certain date. So they're going to need a letter from your employer or something like that for underwriting.
Thank you for that, Tara. And most of this information, starting from the W-2s to everything else that was mentioned, except the letter of explanation, of course, you can get them from your HR department inside of your company. Just ask your supervisor to contact your HR department, and can be under just complete ambiguity. So the next thing we're going to need, which is your assets and debts. So bank statements for the most recent 2 months, and also investment accounts. And go ahead, Damien, if I may. What type of investment accounts are we talking about here? I know I'm the mortgage pro, but as a financial guru, enlighten us on all the income variations of availability to us.
No, thank you for that, Robert. No, that is all your assets, folks. That goes down to your 401ks, all of them. You can't leave anything out. You need to include all your IRAs. If you have Roth IRAs, if you have 529s, if you have individual stocks, if you have CD accounts, if you have bonds, it covers everything. Assets, just think of when they say for assets, they want to know what money do you have, and in all forms, whether it's in liquid cash form or whether it's on the markets and it's in investments, that's still money. Those are still assets. So good point. Thank you for letting me kind of get into that portion. But yeah, those are your assets, folks. Your debts, they're on your credit report, but your assets, no, that's all of your, from your savings account to all the financial instruments that cover retirement. Take it away, Robert.
Thank you, Damien. So he mentioned debts. That's going to be the next thing, because, we want to make sure we're transparent with the lender so we can make sure, hey, we can get that best deal for you. So we have credit verifications. That's the next article needed. So we're going to be able to get that with, obviously, those 6 pieces of information: your name and your social security number, and then also your address, because that's going to be on your ID, and that's usually what's needed. So what that's going to be able to do, that's going to trigger a credit pull on your credit verification. So anytime you're going to get a mortgage, there's going to be a credit pull. And I will say, if you're using someone else's income to qualify for that mortgage, because you can use dual, even up to 3 people to qualify for a mortgage, we're going to need all of their information too, because they want to make sure that they also fit in that ATR rule that was mentioned in our last episode, the ability to repay rule, which will cover a lot of this mortgage 101 to make sure you, the viewer, have all the information to be an intelligent buyer.
Robert,
yes,
sorry to interrupt. Is the credit pull a hard pull or a soft pull?
it is actually a hard pull, and that's a great question.
So for those watching that don't know the difference between a soft and a hard pull, a soft pull is a quick credit check. It's just going to give them an estimated number that your credit is close to, and it's not going to hurt your credit, or it's not going to lower your credit score. A hard pull, which is, as Robert said, in this case, when you're applying for a mortgage, they're going to do a hard pull. They also do a hard pull when you're looking at getting a car. That's going to ding your credit a little bit. So if you're trying to shop several lenders, don't go apply to 10 different lenders and get your credit pulled 10 different times, because that's really going to hurt you. It's going to lower your credit score, and it's going to lower your loan options, the amount of money you can borrow, what your interest rate is going to be. So that can really negatively affect you. So make sure you just get it pulled one time. You can share that credit pull with other lenders if you want to apply to other lenders and discuss the rates with them. But make sure that each lender isn't checking your credit. Because that can really hurt you in the long run.
And with that being said, you know what? When you come with us, we'll even show you, that's Loan and Key with your mortgage. We'll even show you how to make sure, hey, once your credit is pulled, you can use a website that within our last episode, which will be in our show notes on this one too. It's the opt-out credit pull, where, you know what, once your credit gets pulled, your data won't be sold to multiple people. It's not the lenders that sell it. But again, it's a whole other episode that we did go into, but it's valuable information to make sure that you're not being called by multiple people when your credit gets pulled once. Then you can opt out and then make sure, hey, it takes a few days so it can go through and get processed, but then you won't get those annoying phone calls. So we'll be able to make sure that that link is in the descriptions as well. Along with that, you're also going to need, with that credit pull, back to why we need this and why we need your income assets, is because that's going to be the best way to figure out your DTI. That's debt to income. As we mentioned before, our videos are filled with tons of information. That was on the last video, but that's the debt to income, how much debt you're paying to how much income you're making. So we want to make sure that you can actually afford that house and fit that ATR rule. Other additional documents are going to be needed. And that's, again, once that LE gets sent off, expect us to contact you so you can say, hey, there's going to be a relationship here where we're going to be asking for documents. We're not going to try to be, irritating about it and forewarn you, hey, there's going to be some documents needed. All that I just mentioned, if it's going to be a new month, we're going to need the new month. We understand, hey, those, you can get those electronically and those can be emailed to us, or they get mailed to you. You can send us a copy. But the other additional documents needed are the purchase sale agreement. So this is an agreement between the seller and the realtor that you have when you signed off and, put in that bid for that home, that new home of yours. We're going to need that information. Okay. We're going to need, if the other documents needed, if to make sure you're fitting in that DTI rule, is rental income. If you have a rental property, and this is to make sure that profit and loss can be allocated to making sure, hey, you know what, you're actually, this isn't a debt, so to speak, because you're not making any money off of it. It's actually an income stream. So that will add to your DTI, make sure it's a little bit lower so you can qualify for that loan. So you're also going to need a divorce or child support decree. That's just in case if you're paying, or if you're receiving. If you're receiving child support or alimony and you can qualify for the loan, you don't need it. But if you have to pay it, that has to be noted, to make sure you fit that DTI rule. Excuse me. The other thing that's going to be needed is unfortunately, this is another one, is your bankruptcy records. And that's if you've ever declared bankruptcy within the past 7 to 10 years. A lot of lenders will say, hey, we need the past 7 years information if you've had a bankruptcy, and your credit report will show it. Your credit report will carry things up to 10 years. And that's one thing you want to make sure, hey, when you're giving us all your assets, you're honest with all your debts too that you're giving us, because your credit score will definitely show all that information. And we want to make sure that we're as transparent when we're getting this loan, because it's giving you a lot of money in good faith. And I like to quote Warren Buffett, when it's the cheapest you're ever going to be lent money at that amount, which is astonishing when you think about it.
Right. And Robert, I wanted to add, there's one other additional document that comes to mind. Yes, they might ask for rental payment history for your investment properties, but they also, on the other end of the spectrum, if you've never owned a home before, ask for your rental payment history to your landlord, like showing that you've been able to make your payments on time for however many years. So all of these documents ultimately are just helping the lender know and even protect you. Like, are you going to be able to pay this, your ability to repay? So that's what all these documents are for. And when you're going through the loan process, the sooner you get your lender these documents, the sooner that they can get you clear to close, to that closing day, keys in hand. So it might sound like a lot is going on here, but if watching this episode, hopefully you have a better understanding of the kinds of documents that you're going to need so that you can start working on gathering those documents. Once you've gathered all of those documents, it's pretty easy and straightforward from there, getting you approved for your mortgage. And just to summarize what Robert went over, there's different categories that they need to verify. So they're going to need to verify your income, your assets and debts, your credit, and then there's always additional docs, right? Like divorce decrees, or depending on your situation, things that you might need. And I want to go over some of the most common documents for like the average consumer that they're going to need throughout this process, just to keep it a little bit simple. You're going to need an ID, a government issued ID, your pay stubs, bank statements, tax and income statements, investment account statements, list of your monthly debts, and all legal and public records. So if you guys have any questions about the kinds of documents that a lender is going to need, you can always ask us. We're here to help. And I think that sums it up, Robert, on our mortgage documents needed for the loan process, don't you think?
Absolutely, Tara. And you know what? Again, all of our information to contact us will be below, so you can actually, hey, you know what? The faces that you see here, you're actually going to be able to speak to them. We'll set up a conversation, much like how you're seeing here, so you have all the information needed to be an educated buyer. So with that, we want to round off our show here with a financial tip from our financial guru, Damien. Take it away.
Hi, everyone. All right, so today's financial guru tip is going to be something pretty simple. I think I might be able to highlight it right now. Um, I'm willing to guess that one of my two co-hosts may not know their own answer to their own, but I could be surprised, so we'll all find out. So T, do you know every month what your discretionary income is? And by discretionary income, that means after all the bills are paid, you kind of know what that pool of money that you have, what's left over after all the bills are paid. Do you
Yeah,
have an idea of what yours is every month?
I do. Yeah.
Good for you. Ding, ding,
Yes.
ding, 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 ding. All right. Well, she's not in the other 50% quintile that the majority of Americans are usually in. Having something as simple as a budget. I know it sounds very, very simplistic. When I was an analyst, though, nothing got done without us having a budget. When you look at it from a work perspective, you have to have an idea of three major things when you work on any kind of project: budget, that word budget, scope, and your compliance. Those were always things that we would always have to worry about. But budget always came first. And you can take those concepts, much like I did many years ago, and apply it to your own home personal budget. I am kind of old and in the way, and I still do mine on paper. Forgive me, I know, shame on me, shame on me. With all these apps, because they have apps from Quicken, SoFi, Rocket Money, Empower. You need a budget. They just call it YNAB, but it's an abbreviation for you need a budget. Um, a lot of those are paid apps, and they come with subscription fees. I don't pay anything. I just do it the old-fashioned way on paper. It's really possible and quite easy for the every average day person to just, if you have access to Microsoft Office, just to open an Excel sheet. There are very easy YouTube videos that show you how to make a simple budget. Um, the reason why I mention this is because I've found more often than not, people don't always realize how their discretionary income fluctuates from month to month. And when you think about it, we all have unexpected expenses. Sometimes a car breaks down. Sometimes there was an unexpected bill payment. Sometimes, the kids needed extra uniforms. Sometimes there was other stuff that, oh my gosh, like we just forgot to pay that. Like we just had so much going on. It's stuff like that. That's where your ebbs and your flows and your budget come. And that's where it's always important, whether you do it on paper, like somebody old like myself, whether you use an app or whether you use an Excel spreadsheet. However you do it, all I can stress is do it. Get in the habit of reviewing it. The reason why I say that is because you would be quite shocked at how much your spending does really change when you stop to take a look at your bank statements. And most people don't. Most people are just too busy and they really don't have the time to get that granular and that much in the weeds to really ascertain how their financial situation is. But I would just be so absolutely in just complete just awe if I didn't mention the fact that if you do keep an eye on it, that means that you're going to notice when subscription fees change. You're going to notice how much you're spending on money, maybe how much even you're spending on going out. Maybe you guys need to pull back on going out. Or maybe you have a decent amount left and you're like, you know what, let's not go out. Let's put this in a savings account or let's put this away for the kids. But the guru tip is that however you do a budget, do it and do it regularly. Do it every month. Look at and get used to just, even if it just, all it takes, some of these apps, they do all the work for you. All the analytics are there. They give you a breakdown of what you spend on your groceries, on your utilities, on your rent or your mortgage, etc. And I would just say get in the habit of that, because the better that you can get a control on your budget, the better you're going to get at saving your money and investing it and putting it away, because you know what's going on with your own income and expenses. It's just that simple. So with that, that's my only tip. Only tip is just budget, budget, budget. Shake my finger at everybody. But other than that, Robert T, absolutely amazing show and wrap up on all the documents and additional documents that are needed to obtain a mortgage. A really great market update as well. That is everything from the financial guru. Robert, you can go ahead and take us on out.
Thank you, Damien. And you know what? Again, all of our information is going to be below, so you can reach out to us to have that conversation about your mortgage. You know, your mortgage needs, your mortgage wants. You know, even if it's just, hey, I'm unsure on the pros of this. You know, and we'll even deliver the cons if we see something with inside of your credit pool. You know, we'll let you know and be honest. And honestly, what Damien said about budgeting, we'll be able to not tell you how to budget. We'll give you the tools so you can learn how to budget, so you can learn how to be able to be that, you know, have that financial responsibility and take control of that wheel, because it can be a fast one and get you where you want to go every time and when needed, or it can be that really slow one that you need a kickstart. And you know, hey, it starts with, you know, how do you eat an elephant? One bite at a time. And with that, I want to say thank you, Tara, for joining us. Thank you, Damien, for joining us. And thank you for viewing this. And if there's any other tips out there, you know, let us know. If there's any questions out there, let us know in the comments. But you guys have a great weekend.
Thanks, Robert. Bye.
Take care.
Bye.